Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy, and specifically to talk about the fact that Russia is now seen as being in long-term decline. If you've been following the channel, you'll know that over the last 18 months or so, Russia has pivoted and become a full-time war economy. And what that means is that a lot of the companies in Russia are now working directly for the Kremlin. They've been commandeered, they've been told that they need to produce things to help with the war effort in Ukraine. And that's actually acting as a boost in terms of driving up GDP. Because a lot of these businesses were struggling previously because of the sanctions that have been applied against Russia. However, they're now thriving because they're being given these huge contracts by the Kremlin, and they're also being paid directly by the state. So they don't have to spend lots of money on marketing and research and development and new products and ideas. They just produce things for the state and they're paid directly. So this is a fantastic opportunity in the short term for these companies. But when you take a step back and think about what's going to happen to those businesses over the longer period, once the war in Ukraine ends, then these contracts will be withdrawn. And then those companies would need to go back to doing what they were doing originally. However, in business, it's obviously not quite as easy as that, because if you turn your back on your customers and start doing something else, like those Russian businesses are doing at the moment, then somebody else will step in, take over your position, and then it becomes very difficult to be able to go back and just pick up where you left off. It simply isn't going to happen. So in today's video, I want to delve down into the details as to what's been happening with manufacturing and production and output in Russia over the course of the last few years. So I'll have a look at some detailed information showing where Russia has been investing into and what that means for the longer term. We'll have a look at what's going on with retail sales, because there's an imbalance in Russia right now. It's producing lots of things, but most of those things are for the war in Ukraine. It's not producing things that consumers want to buy. And so that's causing a shortage of certain types of product, which is driving up inflation. And those inflationary figures are being accentuated by the shortages in the labour market, which are partly as a result of the fact that lots of people have fled from Russia because of the invasion of Ukraine. So we'll have a look at what's going on with those factors. We'll also have a look at what's happening with expenditure, and particularly the huge increase in military expenditure in Russia. And then finally today I'll wrap up with my summary as to what I think the implications of this shift to being a wartime economy are for Russia and what's likely to happen over the medium to long term. But before we get started on all of that, I'd like to say once again, thank you so much to everyone that's supporting the channel. Genuinely appreciate it. So if you watch my videos, thank you. If you subscribe, then thank you for that. If you're a long-term supporter, either through Patreon, where you can get early access to my videos and watch them advert-free, or YouTube membership or Buy Me a Coffee membership, I really appreciate your long-term support. Thank you for it. And if you've bought me a coffee or sent me a YouTube super thanks recently, thank you for the time and the effort and the generosity involved in all of that. And if you'd like to support the channel in another way, then why not think about buying a ticket for this, which is the Windswept Clock, which is an original Joe Blog sculpture. You can't buy these things, you can only win them. This is the third different sculpture that I'm offering. So if you're interested in having a go at winning this, have a look in the details below and good luck. This chart shows a breakdown of investment into manufacturing industries in Russia, dating back to 2018. The scale on the left-hand side of this chart shows the percentage movement in ruble terms and goes from -10% at the bottom to +20% at the top, and the bar charts have 6 different categories. The red section at the bottom relates to war-related industries, the pink section relates to the repair and installation of machinery, the dark blue section relates to chemicals, the light blue section base metals, the black section coke and petroleum, and the grey section are all other industries. And the blue line chart plots the total amount of investment each year. So if we start off by looking at 2018 and look at the blue line first, you can see that total investment increased by 4%. However, that 4% was made up by a fall in investment into the coke and oil industries. You can see the black section is sitting below the zero line here. So there was a reduction of around 2.5% in those industries. And that 2.5% fall was partly offset by an increase of around 1% in war-related industries, 2% in the chemical industry, and around 3% in all other industries. In 2019, you can see that the blue line is sitting at zero, so there was no net increase in investment. However, that net zero figure was made up by a positive increase of around 4.5% investment into the oil and coke industries, which was offset by reductions in war-related industries, the chemical industry, and other industries. In 2020, total investments increased by around 3%, which was as a result of a positive increase in investments into the chemicals, base metals, and oil and coke industries, and partially offset by a reduction in war-related industries and other industries. Now, interestingly, in 2021, which was the year before Russia invaded Ukraine, there was a 9% increase in total investment, which was the second largest increase out of all of the years shown on this chart. And when you look at the breakdown of that, there was actually a reduction of 3% into the oil and coke industries, which was offset by an increase of 2.5% into war-related industries, 2% in base metals, and an increase of 7% into other industries. Now, in 2022, which was when the war in Ukraine started, you can see that total investment into manufacturing actually fell by 4%. And the majority of that fall was as a result in a fall in investment in other industries. And 2022 was the year before Russia decided to convert its economy into being a wartime economy. And if we look at what happened in 2023, you can see that total investment increased by 16%, which is by far the largest year out of all of those shown on this chart. And as you can see, the entire bar chart is sitting above the zero line, so there was an increase in every single sector in the economy, a 2.5% increase in war-related industries, a 3% increase in the repair and installation of machinery, 3.5% increase in chemicals, 1.5% increase in base metals, 2% increase in oil and coke, and a 4% increase in other industries. So what this shows is that Russia in 2023 decided to start investing heavily into its manufacturing operations. This chart shows the year-on-year movement in industrial production in Russia over the past 5 years. And the scale on the right-hand side of this chart goes from minus 10% at the bottom to plus 13% at the top. What this shows is that in the 12 months to January 2022, industrial production increased by 9.1%. However, as a direct result of its invasion of Ukraine and the impact that the sanctions had, industrial production in the 12 months to January 2023 actually fell by 2.9%. However, that proved to be the low point for Russia, and by January 2024, industrial production had increased to 4.6%, and the latest figures for June 2024 show that year-on-year industrial production in Russia is up by 1.9%, which is significantly lower than the forecast level of GDP growth of 3.2% given by the IMF recently for 2024. If we now look at exactly the same figures for manufacturing production, so this is basically just pure manufacturing, it doesn't include the oil and gas industry and all of the commodities that Russia deals in, you can see that in the 12 months to January 2022, manufacturing production was up by 11.6%, which is similar to the figure that we've just seen for industrial production. By January 2023, manufacturing production had fallen year on year by 2.7%, which once again is in line with what happened with industrial production. However, by January 2024, manufacturing production was up by 7.5%, and the most recent figures for May 24 show that year-on-year manufacturing production is up by 9.1%. So what this tells us is that there is a concerted effort in Russia right now to focus on increases in manufacturing. And this is really as a result of the fact that Russia has now converted to being a wartime economy. A lot of that manufacturing is being sent to Ukraine. It's helping with the war effort rather than producing things for the consumers in Russia. This chart shows the output trends for Russia's war-related industries, shown by the red line, and all of its other manufacturing industries, shown by the blue line. And the scale on the left-hand side of this chart is an index and goes from 100 at the bottom to 200 at the top, with the index of 100 being the average output for 2019. So if we start off by looking at Russia's other manufacturing industries, At the start of 2021, the index was sitting at 103, which represents a 3% increase compared with the average output for 2019. By the end of 2021, the index had increased to 110, indicating an increase of 10%. However, as you can see, the index fell sharply in 2022 as sanctions started to be applied against Russia and got back down to around 103. And over the past 2 years, there's been a gradual increase in manufacturing output, and the latest index figure is sitting at around 111, representing an 11% increase over the past 5 years. If we now have a look at the output figures for war-related industries in Russia, you can see that there is a significant difference. At the start of 2021, the index was sitting at 110, which represents a 10% increase against the period from 2 years previously. By the end of 2021, the index had risen to 125, which represents quite a sharp increase. Interestingly, in the first 3 quarters of 2022, there was a fall in the output of war-related industries, and this was really as a result of the fact that Russia wasn't focusing on becoming a wartime economy. It was really just focusing on trying to sell as much oil and gas and coal to China and India and other countries that wanted to buy it. However, towards the end of 2022, Russia took the decision to develop its wartime economy, and you can see that the result of this is that the level of output from war-related industries increased dramatically, and by September 2023, the index was sitting at 175, representing a 75% increase against the average for 2019. There was a slight reduction at the end of 2023 as the policing of the sanctions started to increase. However, in 2024, the index has taken off again, and the most recent figure is 193, representing a 93% increase against the average for 2019. And if you take a step back and look at the shape of these two line charts, you can see the real focus that's been applied by Russia in terms of investing into that wartime economy, which is providing a short-term boost in GDP, as we discussed at the beginning of the video. But the problem is that these companies are now totally dependent on the state for this business. And if the war in Ukraine was to stop, then all of that business would die overnight, and these companies would be in a severely risky situation. They may not have any customers, and therefore they could be left with no income. This chart shows the year-on-year movement in Russian retail sales over the last 12 months. And the reason that I wanted to show this is really to highlight the fact that Russian consumers are not being given the goods that they are looking for. There is a shortage of goods and workers in Russia right now. So the increases in manufacturing that we're talking about are not finding their way onto the shelves in Russia. In June 2023, retail sales in Russia were up by 12.9%, which is a very high increase. And as you can see, over the course of the next 4 months, retail sales continue to increase at a strong level. And by October 2023, the year-on-year increase was 13.8%. Now that fell to 10.6% in November and 10.7% in December, which is still an extremely high level. It reduced to 8.5% in January, but bounced back to 11.7% in February. However, over the past 4 months, there has been a notable decline in retail sales, and the most recent figures for June 2024 show that the year-on-year increase is now only 6.3%. So this tells us that either demand is now falling in Russia, or there are simply shortages in Russia, and the way to get to the bottom of which of those it is by looking at what's happening to prices. This chart shows the movement in the official rate of inflation in Russia over the past 12 months, and what this shows is that over the last 12 months, there has been a rapid and consistent increase in prices. In June 2023, the year-on-year movement in prices was sitting at 3.3%. And as we just discussed, the increase in retail sales in that same month was 12.9%. However, over the last 12 months, prices have increased rapidly, and the most recent inflation figure for June 24 shows that the year-on-year movement in prices is now up by 8.6%. But as we just discussed, retail sales were only up by 6.3%. So what this tells us is that Russian consumers are still wanting to spend. They're increasing the amount that they're spending year on year. But relatively, that increase in spending is reducing and prices are going up. So this tells us that there are shortages in Russia, that there is not enough supply, there is too much demand, and that tells us that the economy is overheating. And one of the reasons for that is because of this focus on becoming a wartime economy. Russia is producing more, but it's producing things that are going over to Ukraine rather than being sold to Russian consumers. And that is not healthy for the long-term prospects of the Russian economy. This chart shows the annual percentage movement for total expenditure for the Russian economy, shown by the blue line, and military expenditure dating back to 2013. And the scale on the left-hand side of this chart measures the percentage movement and goes from minus 20% at the bottom to plus 70% at the top. So if we start off by looking at total expenditure, the blue line. Back in 2013, total expenditure increased by almost 10%. The year-on-year growth remained at around 10% in 2014, but started to reduce over the next 3 years and hit a low of an increase of around 3% in 2017. Now, between 2017 and 2020, expenditure started to increase rapidly again, and the increase got up to 13% in 2020. It fell back down to 10% in 2021, rose up to 18% in 2022, fell back to 13% in 23, and the budgeted level for 2024 is an increase of 9%. So the overall summary of what's been happening over the last 11 years is that Russia has increased its expenditure in every single year. However, that increase has been reducing over the last couple of years. If we now have a look at what's been happening with military expenditure, it shows a really interesting trend. In 2013, the year-on-year movement was an increase of around 12%. That figure increased to 15% in 2014, which was the year when Russia annexed Crimea from Ukraine. The increase rose to 24% in 2015. However, in 2016, it fell back down to around 15%. And then in 2017, there was actually a reduction in total military expenditure of 15%. And this really represents the period once the annexation of Crimea had been completed. In 2018, there was no increase in military expenditure. In 2019, it increased by just under 10%. In 2020, the increase fell back to around 6%. In 2021, it was back up to around 10%. However, in 2022, which was the year when Russia invaded Ukraine, there was an increase in military expenditure of over 45%. In 2023, there was a further increase of 30%, and the budgeted figure for 2024 shows an increase of almost 60%. And once again, if you take a step back and look at the shape of the red line and the blue line, you can see that as Russia ramps up its military operations, it also ramps up its military expenditure. And the gearing up over the past few years really indicates that Russia isn't likely to walk away from this conflict at any point soon. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening right now in the Russian economy is absolutely fascinating, because it's far too easy to look at headlines and just assume that everything is absolutely fine. In fact, it's better than absolutely fine. Russia is thriving. It's doing really well. And if you look at things like the IMF's forecast for 2024, whereby it's expecting Russia to grow by 3.2%, which is more than 0.5% more than the USA. So at face value, if you're comparing those two like for like, you would say Russia's doing better than the USA. However, you always have to look into the details. You've got to lift the bonnet and see what's going on with the engine. And what's happening in the Russian economy right now is seriously bad news for the long-term growth prospects. What we've seen over the last couple of years is that Russia has been investing heavily into its economy, which at face value is a good thing. If you're putting lots of money into infrastructure and manufacturing and developing industries, then that should pay dividends over the longer term. However, where Russia has been focusing its efforts are on things that are going to benefit its war efforts in Ukraine. So it's been focusing predominantly on manufacturing businesses that can help with the wartime equipment. So it's been reported that over the last 12 months, there has been a 50% increase in manufacturing industries that have something to do with the war, and a 0.5% increase in all of the other businesses. So that's 100 times difference. Now, that does pay dividends in the short term, as we've discussed. If you're sponsoring businesses to make things for Ukraine, then it's great for those companies because they don't have to waste money on research and development and new product launches and marketing and all of those sorts of things. They can just focus on making all of that equipment and being paid directly by the Kremlin. However, once the war in Ukraine stops, then all of those contracts disappear overnight, and all of these businesses would then be left to fend for themselves. And they might not be in a position to be able to restart because everybody's been focusing on producing things for the state, and that means that they're no longer looking after their customers. And the other thing that's happening right now in the Russian economy is because the Kremlin is sponsoring all these businesses, these companies are desperately trying to recruit more people so that they can produce more things. So wages are going up. The people who are joining those companies are leaving vacancies with their old employers, and their old employers are having to offer higher wages to compete in this new marketplace. So we're seeing a spiralling of wage costs at the same time as there's a shortage of people. We've talked about it many times before, but around 1.2 million people have left the country permanently as a result of the invasion of Ukraine. And there's also been hundreds of thousands of people who've been called up. So there's a lack of personnel. Also, we've got the problem with migration. Previously, Russia had lots of migrants who were coming in from all of the surrounding countries. That isn't happening as much now. So Russia is struggling to recruit in new people to fill all of those jobs. So we've got an economy whereby there's a shortage of people in a lot of other companies that are not doing anything for the war effort. So those companies are now struggling in terms of their productivity and output. So they're likely to become less competitive and lose their own market share. A lot of the other companies have abandoned their old customers and products for things that are happening in Ukraine. So that's not good for the long-term prospects for Russia. And what all of this is leading to is a rise in inflation. We saw the figures earlier in terms of retail sales. Retail sales are still rising, but at a much slower rate. And what we're seeing is prices going up because there are shortages of products in Russia. There is simply less choice now for Russians than there was a couple of years ago because a lot of the West is no longer providing any of their products. And where companies can pick things up on the black market, they're having to pay considerably more. We've also got the problem that the Russian ruble is worth less today than it was 2.5 years ago before the invasion. Previously, it was trading for around $1 to 75. Now it's trading somewhere in the region of 85 to 90. So anything that's being imported is now relatively more expensive. That's forcing up inflation as well. And as a result of the rising cost of everything, the Russian central bank has increased interest rates to 18%. In fact, they've increased interest rates by more than 10% over the last 12 months. And there is no end in sight because this is becoming a vicious circle. So there are a lot of factors now that are pointing to the fact that Russia is overheating. It's producing more, but the things that it's producing are for what's happening in Ukraine rather than for its own consumers. That means that there are shortages both of people and products. Those shortages are leading to higher prices, which is driving up inflation, which is driving up interest rates, making it more expensive for companies and individuals to borrow. And all of this is pointing to the fact that there are some serious long-term problems now building in the Russian economy. And it's likely that Russia is going to enter a period of severe recession at some point when this war ends. Now, that's the big question. Will Russia walk away from the war in Ukraine at any point? Or will it become dependent on that war? If the economy needs the war to keep growing, then Russia is unlikely to pull out. But the big Achilles heel here is that Russia is funding its losses. It's making losses as a result of everything that's happened. Those losses are being funded by the National Wealth Fund. That National Wealth Fund has reduced by more than 50% over the past 12 months or so. And at some point, that money could run out, and if Russia gets to that stage, then it will be in a world of pain because it won't be able to keep funding those losses. It won't be able to keep paying all of those companies for the wartime economy, and that's when Russia could find itself in a disastrous situation. So hopefully you've enjoyed today's video, you found it useful, informative, and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Don't forget you can win the Windswept Clock. I'll have a look in the details below. And here's something to put a smile on your face.